Rivian just hit a new low at roughly around $14.20 on Wednesday, and investors are just getting hammered as bad news are coming out. So today, let's talk about what exactly happened and what you guys have to know if you're interested in Rivian or if you're already invested in the company. So with that said, my name is Chris, super happy to see you here, and let's jump right into it. It has been a really rough path for Rivian since it IPO'd back in September of 2021, because it IPO'd at a share price of roughly around $120 and since then the stock has lost roughly around 90% of its value. So we're currently talking of a share price of $14 to $15 compared to $120. So it has been really difficult for investors. I've warned that this might happen in my previous videos. I also talked about it when I was talking about Lucid. Check out, the previous videos. So as you can imagine, there are a lot of bad things that can be said about those companies at the moment, just simply because the share price is down so much. But before we get into those bad things, there are also a few things that are really good with Rivian, and I'd like to talk about those things first. I'd like to have a look into the positives of Rivian first, and then afterwards we're going to look into a little bit the troublesome things that are happening at the moment. And the first thing I'd like to talk about is actually their production numbers. So they have produced 24,000 cars in 2022. The other 1,000, so the difference between 24 and 25,000, the other 1,000 they have produced in 2021. But we can see that was a really small production, and they've actually ramped up all of their production in 2022, right? So that's definitely good, and we can see that they have that growth of roughly 36% quarter over quarter. So Rivian is still growing, even though it's growing slower than we expected. The company is definitely still growing, and it is performing okay on an operational basis. They mentioned that they have some problems with their supply chains and they're not really getting everything they need to ramp up production more. But I think that's not a problem only with Rivian. Other companies, other car manufacturers, they cite the same issues. Just a quick plug, don't forget to share your thoughts on Rivian in the comment section so we can have a really good community here talking about investments and so on. Also, don't forget to smash the like button, and if you really enjoyed the video, then also subscribe for more content like that. Another thing that we have to really consider is that Rivian still has roughly around 12 billion. It's in fact a little bit below 12 billion, but roughly 12 billion US dollars in cash and cash equivalents. And that's really a lot of money thinking about it. But the problem is that they are burning through a lot of money every year, and we'll look at that a little bit later. So it's everything, relative to how much they're actually burning through, right? 12 billion can be a lot, or 12 billion can also be not that much. Additionally to that, they have also mentioned that they will produce roughly around 50,000 cars in 2023. And those are really a few points where Rivian is performing good. So I think it's not fair to, even I'm not a big fan of Rivian, right? I think if you watch previous videos of mine, you'll probably know that I don't think it's better than anything else, right? So I'm not really a huge fan of Rivian. I mean, they're okay, they're producing good cars and so on, whatever, right? But I don't think they're better than others. But I think it's not fair to always only look at the negative things of those companies. And that's the same thing here with Rivian, right? They have performed good in some areas. And I think it's fair to also respect and to mention those kind of good performances that a company has. And that's really what I'm trying to do here, right? So I gave you an example, right? People said, oh, the company's not growing and it's very bad and it's worse than we expected and so on. Well, let's have a look at that claim, right? So if we look into their operation statement, financial income statement and so on, we can see that in 2021, for the 12 months, so the full year, they had a revenue of 55 million US dollars, and they ramped that up to 1.7 billion US dollars. That is insane growth. It's difficult to grow more than that, right? That's insane growth. We have to be clear with that. So operationally, they've performed really good. I mean, what are people expecting, right? Where it gets problematic, and I'm going to stay on this slide for a minute, is that Rivian is extremely unprofitable. So even though they've ramped up their revenue, look what happened with costs of revenue. So costs of revenue has jumped from 520 million to almost 5 billion. So it costs them 5 billion to produce a revenue of 1.6 billion. That's an insane loss. So that's a yearly gross loss of 3.1 billion. And that's just producing the cars. Then we get all the research and development in, we get the selling and generals and so on. So in the whole year of 2022, they lost 7 billion US dollars. And I gotta say, sorry, Rivian, with whatever you did right, but 7 billion US dollars in a year is insane. And that's why before I said we have to put those 11 or 12 billion of cash and cash equivalents into perspective. Because if you have 12 billion of cash, it sounds like a lot of money. You're doing well, right, with 12 billion. But if you're losing 7 billion every single year, well, 12 billion is not going to take you very far, right? So, I mean, there is some serious issue that Rivian might not survive the next 2 years. Because if they continue to burn cash like that, they're going to be bankrupt. They won't have those 12 billion in cash are just going to be gone. And that's what investors are actually scared of at the moment. That's why investors are trying to get out of Rivian. Because, hey, you're having a cash burn of 7 billion. That's more than half of your whole cash reserve is gone in a year, which is insane. And that's where we come into the news that we've just received, that Rivian actually is issuing new bonds, right? And we can see that they're trying to sell 1.3 billion of so-called green bonds. Well, green bonds is just a way of saying nowadays that we'll offer you a lower interest rate because we're green, right? At the end, you're still going to have to pay the bonds back, and you're still going to have to pay interest on it, and it won't help you to call it green. At the end, they're bonds, right? And what happens is that investors are worried about those 1.3 billion because it shows that the management team and the executives of Rivian are not sure if they're going to survive the next economic downturn and the higher interest rates. So as you guys know, as interest rates go higher, if Rivian wants to borrow money in the future, it's going to be much more expensive for them, right? So I believe that they're trying to get the money now before interest rates get even higher. And that's of course scary because that means that you can't afford higher interest rates anymore. And at the same thing as a second little problem is that those are convertible bonds. You're going to have to pay interest on those bonds. And at the end, investors can decide if they want to have stock for it or if they want to have the money back. And if a lot of investors choose stock, it's going to be a huge dilution again of current shareholders. And all those things together, it just creates like that toxic pool of where Rivian is in at the moment, because they're forecasting, lower deliveries than they initially wanted to deliver for 2023. So they're kind of not performing that good on that side. They're burning through 7 billion in cash every year. So that's a terrible number, right? They still have to invest a lot in capex. They still have to invest a lot in research and development and so on, right? So it's still a developing company in a way. So that's going to cost a lot of money. Then we're going to have some economic problems maybe in the future because of interest rates rising. And now Rivian is also kind of proving all of that by taking out more bonds. And I think that, like I just mentioned, that's really, really toxic. And investors just want to get out of that. They don't want to be in the company that's losing that much money. I don't want to say that Rivian is not going to survive it, but it looks like a little bit tough at the moment for Rivian to go through the next 2 or 3 years. And there's so much competition, and there's so many awesome EV companies out there that, I think that every EV company is really fighting at the moment. And if you have, not a very strong balance sheet, you getting in more debt into your company, you might end up to be one of the losers. And I think that's what investors are scared of at the moment. That's just my take on it. I'm personally not invested in Rivian. I'm not going to take a stake in it at the moment. I think at roughly around, it's roughly around 13 or 14 billion US dollar. It's really way overvalued still. even if it's down, 80-90%. Yeah, I think companies like, as example, Polestar would be much, much better if you want to get into the EV, game as an investment. And just for me personally, I wouldn't touch Rivian at the moment.